Something major just happened on Bitcoin. Hey guys, what's going on? Jeb here, and in today's video, we're going to be talking about a massive rally that Bitcoin embarked on over just the last couple of days, and today, I'm going to show you not only why we might be on the cusp of a major rally for Bitcoin, I'm also going to show you how to profit no matter which direction the market moves using our proven process of the 3 Ps. If you're interested in seeing where Bitcoin will go next and how to profit from that movement, stay tuned because I've got a lot of value to share with you today. So without much further ado, let's go ahead and dive right on into it. Bitcoin has been in a general downtrend ever since the 13th of July, 2023, when the XRP case was settled and XRP was found not guilty of selling unregistered securities to the public. Many people thought that Bitcoin would break through resistance at 31,500, go on a massive rally on that news, but Bitcoin showed that it needed to have a larger correction, and that's what we've seen happen so far. That correction has been the trend, and as we know, the trend is our friend until it ends. But it seems that that trend could be ending soon. You see, this correction that's been in play ever since the 13th of July has led to several lower highs, in fact 4 predominantly. The first high being here at $31,000, the second high being here at $30,400, the third high being at $30,300, and the fourth high being here at $30,000 flat. Over the last 48 hours, Bitcoin has now set a newer high. I would not call this a confirmation of a new uptrend yet, but it does bring into question, is this downtrend still valid when we're now seeing higher highs? This is brought into even further question when over the last 2 weeks, we've also seen 2 consecutive higher lows. I believe that Bitcoin is on the very cusp of being able to break above $30,000 and enter a new uptrend above 31,500. But that hasn't been confirmed just yet. We've got early warning signs that that could be coming, but it's not confirmed yet. So using our principle of technical analysis that the trend is our friend until it ends, we are going to make predictions based on the fact that we're still in a downtrend that is looking like it may soon confirm an uptrend. So today I want to run you through something I call the 3 Ps. This is a proven process that I have run over and over and over again on Coffee and Crypto and in our videos where we walk through having a blank chart to walking away with a trade setup where we are prepared for what to do if the market moves up or if the market moves down. We don't have to worry about getting wrecked because we use a solid stop loss strategy, and this will leave us with plans that will almost certainly bring us profit. We're talking 70-80% likelihood here. So let's go ahead and run our proven process on this market and see if we can come up with a plan for how to trade any volatility that may show up over the next week. The very first stage of our process is finding levels that are key. This is part of our perception stage, the first P of the process. To find the key levels, we first have to figure out where we are. Right now, Bitcoin is trading at $29,500 at the time of recording this video. What we're going to do is we're going to find the 3 most important levels above where the market is now and the 3 most important levels below where the market is now. The 3 most important levels above us right now are as follows. First and foremost, $30,000. Why? Well, there's a principle of technical analysis that the big evens are the levels that are the most important. $30,000 is a level that's much more likely to be rejected from than $29,752.43. Nobody's thinking about that number. Everybody's thinking about the number 30K because it is what gets attention. So that's the first ceiling above us right now. The second ceiling that's going to be important here is $30,350. This next level above us is so important because of 2 reasons. Number 1, it's a level that the market has rejected off of over and over and over again and found support at many, many times. Secondly, if we look at something called our VRVP, we can see that it is also the end of much of our VRVP resistance right now. And if we zoom out even farther, we can see it actually reflects something called the point of control on VRVP. 30,350 is a very important level for those 2 reasons. Number 1, because it's a level that's been tested and rejected from over and over and over again as support and resistance, and it's also the point of control on VRVP, as you can see with this line. The third and final ceiling that's going to be important for our setups is $30,850. $30,850 represents a level that the market tested many times in recent history, as we can see back here in the late month of June and the early month of July. And it also represents the fall off of the VRVP. It's a level that we're going to want to pay attention to. Now that we have those levels in mind, we will come back to them in a moment when we set up our profitable trade setup so that we can profit if the market goes up. But first, let's also find our support levels. Remember, we're running through a proven process that is going to yield us a prediction about where the market's going to go, but it's also going to help us have trades so that no matter what direction the market goes, we are prepared to profit from it. Now to look for the 3 levels below us. One level that's going to be important is $28,545. This level is significant because it is a level that we set as our absolute bottom of this downtrend on Tuesday the 1st of August 2023. 28,545 is also a massively historically important level of resistance, as it was resistance set here on the 29th of May 2023, and it's also the absolute low of the multi-month bear trend that we saw in 2021. 28,545 is hugely important and is close to where we are now, so it's going to be relevant. A level closer to where we are that is also going to be relevant is 29,450. The reason for this is because it's a little bit of a bump on the VRVP. It's a level that we've tested as resistance multiple times, and it is also the level that we're currently setting as support. And the third level that we're going to look at here is this level right here at $29,170. It's the point of control on the recent VRVP, and it's also a level that we have used as support and resistance multiple times in recent trading. So there are the 6 levels. That's what we do in the perception phase. Now let's make our predictions. For reasons I explain in detail on today's episode of Coffee and Crypto, you can go back and watch that. I give it a 51% likelihood that we're going to move to the downside, and a 49% likelihood that we're going to move to the upside from where we are now. 49% likelihood we move above 30K in the next 7 days. 51% likelihood we move below 29,450 in the next 7 days. Why is it so close to 50-50? Well, 2 things to keep in mind there. Again, number 1, the predictions don't matter because we plan for both. If the market goes up, we're going to have a plan for that. If the market goes down, we're going to have a plan for that. But 2, remember the principle from earlier. The trend is your friend until it ends. Right now, Bitcoin is so very close to confirming an uptrend, but it hasn't done it yet. We have to stick by our proven principles because it's our proven principles that we run 1,000, 2,000, 5,000, 10,000 times, and utilizing the core value of compound interest, we are going to be successful. We don't try and come up with how to do bench press every time we do bench press. We do it this way so we don't hurt ourselves, so we don't drop the weight on our neck and hurt ourselves. We do it the same way every single time. If you're a runner, there's one way to run correctly with good form. If you're doing a squat, there is one way to do squat correctly and protect your back. If you're doing a deadlift, there's one way to do it correctly. This is the one way to do it. The trend is your friend until it ends. And so when we make our predictions, I have so much bullishness in here. I'm like, man, it looks like Bitcoin's trying to break out and go bullish. Hasn't proven it to me yet. So 51% likely we'll move to the downside. Now, we have an idea of where the market's going to go, and we have our perception of where the levels that are important are. Let's move on to step 3, that being our plan. This is very simple how we do this. All we're going to do is we're going to set up 2 long trades above us, 2 short trades below us, just like this. We're going to grab our long position over here on TradingView, and we're going to set up a long entry just a little bit above the first ceiling. The ceiling's at $30,000, so we're going to set up an entry, let's say $30,030, just a little bit above that level, so that we're not entering into the trade until we've actually breached through that level. Then we're going to set up the stop loss just before the ceiling, so that if we rally up there and fall back down, then we stop out, and then we're going to set our take profit right before the next ceiling. Again, we're not going to fiddle with the process. We're going to run the exact same process over and over and over again, and it's going to make us money. By doing some variation of this, using those levels that we found earlier, we're going to find a risk-reward ratio by fiddling with the numbers a little bit of over 6x, and it's going to be great. Side note, you're going to use a trailing stop loss here of either 0.1% or 10% of the target profit potential. In this case, we're already looking at a 1.03%. So in general, you're going to use about a 1% stop loss. You may notice in recent times, we actually would have triggered this trade. And if you had have used that trailing stop loss, you would have made 0.6%. Moves down 0.1%, you'd still be up 0.5%. Did you catch the top? Yes. Did you profit from catching the top? Also yes, if you don't neglect to use the trailing stop loss. If you only use the stop loss from the trade entry, which oftentimes that's not the stop loss you want to trigger, that's just there to save your butt if you weren't paying attention, you would have lost money. If you use the trailing stop loss, you would have made money. The trailing stop loss is the key to this whole thing working. Here, the market rallied 0.26%, trailing stop loss of 0.1%, you end up making 0.16%. Both of those trades, you made 0.75%. In how long? Less than a day. You do that 365 days a year, you will more than double your money every single year. This works. Do it over and over, and you will make money. That simple. All right, let's get the rest of the trade setups gone pretty quickly. Now, we have another ceiling above 30,300. It's 30,850. We don't need to go back and figure out, okay, why do we put these levels here? We already did that. That's in the past. We're going to set our entry right above the next ceiling, the exit right below the next ceiling, stop loss right below the next ceiling, expand this out, and we've got a 7x risk-reward ratio. If the market runs through here using that trailing stop loss, you're going to make money. We also have a level up here at 30,176 from earlier analysis. I'll just go ahead and give you a trade setup for that. Boom, there you go. I'm not trying to give you a fish here, guys. Do this on your own. Run the system yourself, but listen, this works. This works. I'm not saying use my exact numbers, but these principles, they work. All right, now let's look at the short trades because, of course, we want to be ready for anything. If the market moves to the downside, it's the exact same thing. Stop loss, in this case, just below the next floor. Target just above the floor below that. Then we've got a trade setup. We're only looking at 2.72x risk to reward ratio, so let's see if we can make that a little bit better by stretching things out. We're going to put the entry a little sooner, the exit a little farther, really lean heavily on that trailing stop loss. Then we're going to have a 6x risk to reward ratio. We doubled the risk to reward ratio just by fiddling with the numbers a little bit. Moving down, we can see there is a bigger gap between 29,158 and 28,545. We're going to set up a short trade right here. We're going to bring the stop loss in close, entry in close. Target right above the next floor, down there at 28,545, 15x risk to reward ratio. You could put another level in here and segment that, probably around 29,000. But even if you don't, it's going to work fine. Use your trailing stop loss, and if the market moves to the downside, that's how you profit from it. And now when we walk away from the market, if the market goes up, then we have a plan. If the market goes down, we have a plan. If the market goes sideways, you don't profit from sideways trading, so we don't need to plan for that. Does it matter if the market goes up or down? No. So long as you're able to long and short on whatever exchange you use, and so long as you're able to use a trailing stop loss, which most exchanges have, then you have the ability to do exactly what I just said. You just write down the plan, you run it, and you rinse and repeat it 10,000 times, and you'll make money trading. It's so simple. It does not need to be complicated. Look, I could come here and I could show you all the technical analysis, but your dream here is to understand, okay, the market's probably going to go here, and this is how I make money from it. So here you go. Using the 3 Ps, our proven process, you can walk away from today's video saying this is a plan that we can run, and then we can come back in a week and we can see whether or not it worked. If it goes up and we thought it goes down, okay, that's fine. We have a plan for that. If it goes up and we thought it was going to go down, then okay, we have a plan for that. But now, hopefully, you'll have an understanding of how to plan for this market. And I'm also here to tell you that I do think that Bitcoin is getting close to a major breakout in the next month or so. I'm not thoroughly convinced it's going to happen right now. I'm still siding with the bears because I have to based on my principles. But it could happen, and I think within the next 2 to 3 months, you're going to see Bitcoin rallying back up to $31,500. And for all of the investors out there, you should be hearing, ring, ring, it is maybe time to start considering making some kind of investment. If you enjoyed today's video, make sure to hit that like button, subscribe to the channel, and implement the 3 Ps. You're going to be so glad you did. Again, perceive, predict, plan. Perceive what's the market doing, what levels are important. Predict which direction do you think the market's going to go, so you have some idea of how much attention you should put into each one of the plans, the long and the short plan. Make a plan based on those principles, and then let it run. You're going to be glad you did. Don't forget trailing stop losses. The whole thing rides on those. Make sure to hit that like button, subscribe to the channel, and don't forget to check out our new series, #FinSoft Fridays, because if you don't know, I also help teach about personal finance. I teach you how to make a ton of money here in crypto, and I also help teach you guys how to manage it so you don't lose it, because I made a lot of money in my career, and then I made some kind of dumb decisions with it, so I lost some of it, and now I've learned how to be an expert in managing that money also, so that we can do both. We can make a lot of money, and we can also grow it because we're good managers and good stewards of it. So make sure to check out that series. It'll show up on the end card here. Before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.